Shares of Carvana and some other online car sellers ending the day in the red after Amazon announced it's going to allow auto dealers to sell cars on its site, starting with Hyundai. Joining us now is Carvana CEO Ernie Garcia. Ernie, is this a threat to Carvana, or do you see it differently?
Hey, well, first of all, thanks for having us. Really appreciate it. I think we started selling cars online in 2013, and I think at the time people thought that it was a little bit of a crazy notion, but we believed it was something consumers wanted, and I think that today Amazon jumping into the fray here, I think that that's great news. I think it validates this is something consumers want, and we think it's something that will probably accelerate consumer adoption of automotive e-commerce, and that's something that we welcome.
Strategically, what's your parry here? There have been some times when Amazon has gotten into a space and it has crushed the smaller players, and there have been other times, you think about Etsy and some other company where Amazon has done something with small craft makers, and it hasn't really had as big a negative impact as investors feared. What do you think is going to make the difference for Carvana on whether you actually improve, get better in your financial results because of this? Is it pricing? Is it service?
Yeah, I would reframe it a little bit. What I would say is, we're the largest seller of cars online today. We sell about 300,000 cars a year, roughly, if you look at last quarter and annualize it. And there's about 40 million used cars sold per year in sum total in the U.S. There's about 15 million new cars sold per year in the U.S. So I think the way bigger trend here is consumers moving online to buy cars. And we think that the more that grows, the better it is for all of us, frankly. And so I think that that's great. We would like to think that we've built an incredible customer offering over the last 10 years. We've been focused on nothing but giving customers great experiences when they buy cars online. And we're pretty proud of that. There's, millions of customers that have gone through Carvana that I think are pretty happy with what they've seen. And so we'll just keep doing our thing and delivering great customer experiences.
Yeah, Ernie, it's good to see you again. Amazon is focused on new cars, and they said that Hyundai is the first, quote unquote, first that they're partnering with here. What does that mean in terms of the inventory picture at all, if anything, and what your mix is going to look like, or competition for the mix of what you sell on Carvana?
Sure. I think, first order, I wouldn't expect there to be a ton of changes. And again, I would just say that because the market is so large. I think it's easy to lose sight of just how large this market is because there's, only a few automotive retailers that are public. And so I think a lot of times people miss kind of the scale of the market. But, between new and used, there's 55 million cars sold per year. And we're the second largest used car seller in the country. And we've been run rating about 300,000. So I think relative to the scale of this market, the most important thing is just more customers moving online.
Yeah, we've seen the price of used vehicles come down as well. I just think about the Manheim Index that was recently released. Does that trend continue here? It got my attention because, and we saw it in the CPI data this week too, it got my attention because we have had this auto workers strike, and yet prices definitely seem to be in disinflation mode.
Sure. So I think, car prices and I think every bit as importantly, car payments have been very high over the last year and a half. For a similar car, consumers are paying about 50% more than they were pre-pandemic. And so that's obviously inflated a lot more than the rest of the other goods in the economy. We have seen some moderation in car price over the last several months. I think our hope is that will continue. It clearly is better for consumers when there's a healthy, production market or production cycle that's driving supply to be more balanced with demand and prices come down. So that's absolutely what we're rooting for. I think it's hard to predict. There's been a bunch of up and downs over the last couple of years, but our hope and our expectations over time, car prices should drop.
Well, but what's the impact that you expect on margins from more people entering and perhaps from Amazon entering this business? They tend to be willing to spend, at least in the past, in different economies, to get people lower prices or the appearance thereof.
Yeah, so again, and I apologize to keep going back to the same point, but I just think this market is so large, and I think maybe another spin on the market is there's literally tens of thousands of dealers out there, and many car dealers have pretty similar cost structures. You drive up and down Dealership Row, you see those buildings that are pretty similar to one another. The rent for those spaces is pretty similar. They're generally using similar third-party software products. They're paying people about the same amount. And so there's a lot of ballast in automotive retail because there's so many players spending similar amounts of money. And so I think, absent a player that has absolutely enormous market share, I think it's really hard for any one player to dramatically impact the margins in automotive retail overall.